So let me refresh my page and then see.
You're live. Here we go. You probably can't see it. I need to send you the new link.
Yeah, I'm trying to see if it'll at least pop up on the page itself. Oh yeah, here it is.
You see it?
Yeah.
I'm gonna share it with the people.
Join in. And the charting will start. Is there an option to record it?
I think.
Oh yeah, then that's good. Just keep that off. That's
Yeah, I
right
think
there.
it'll just automatically. Yeah.
Okay, cool.
Is there a mute option though?
A mute for
Like the video, the voice. Like, can we mute the voice?
what voice?
Midway, our voice.
You want to mute us
Yeah,
so they can't hear us?
midway, if necessary, because you never know. Like this, a noise can come. You know, your brother can connect to the speaker accidentally. You know.
True. I wonder. I don't know, guys. This is our first time, so. Okay, cool.
Can they hear us? Analytics, concurrent, 3 playbacks, average watch time.
There's 5 people watching right now.
Sweet.
Show us some love in the chat. Let's see who's up here so far.
That's funny, Julian. That's funny.
Yeah, I mean that's my new official title. I'm gonna change my Telegram name to
Okay, so they
the
can't hear
official
us.
CSO.
Okay, cool. So let's just give a minute to everybody to join before we start charting. Do me a favor, guys, and if you have chart requests, please go ahead and post them. That way I can get to them. I'm gonna go ahead and remove all the lines and resistance points from the charts. That way I can kind of show you guys how to do everything from scratch. That way you guys learn our method, and you know there's not really much to it. It's pretty easy. Excited to do this. Like I said, I have trouble talking on video, but my CSO is here to help me out. That way I don't stutter. You know, I got some
some support. Yeah, it's a learning experience for everyone, I bet. Even for me, I only started doing this about a month and a half ago, and I'm starting to get the hang of it. But the charts we're gonna start with just right off the bat, because it seems like these 3 were fan favorites towards the end of the day, and I know a lot of people are holding these as swings. So the 3 we're gonna start with are gonna be Disney, Microsoft, and Mark.
Okay, cool. So we're just gonna give everybody a couple more minutes to join before we go, and then we'll go from there. If you guys have any questions as well, so I'm not here only for charts. If you guys have any questions, I know a lot of people in the chat are new to the stock market in general. I'd love to answer all your questions. It's a lot easier to explain things, you know, in by voice and you know by talking rather than by texting and typing. So if you have any questions, now is the time to lay them out. Also, I will be doing this more often if this goes well. I know we don't have too many viewers, but hey, we got to start somewhere. I don't really care for the number of viewers we have as long as we're helping somebody out there. And then we'll go from there. Austin, what's going on, boss? Rob, probably the first time you hear my voice. I know we've been in the chat since day one. Could you see if you can stream at least on 720? Numbers are a bit blurry on my end. Let me see.
Yeah, on the laptop view it seems fine. Maybe on I could see how it could be blurry on the phones.
Let me see if I can edit that.
It might be from the OBF settings or OBS. I keep forgetting if it's OBF or OBS.
Studio mode. Settings. Here we go. Stream general. video.
Yeah, I know from past experience that YouTube live streams are not always the clearest of them. So I hope you guys are able to connect with like a laptop or watch us through like an iPad, something with a bigger screen, just so it can be clear, more clear. But this also would be, it looks like we're going to be able to upload it right after we're done. So if you do happen to miss it right now, or if it's a little blurry, you can always rewatch it later on a bigger screen.
Yeah, it's not giving me the option here. Max is set to 480. Oh, I see. Okay. Yeah, I wonder what this is. I wonder if there's a way.
I'll look it up right now.
Do me a favor and do that. Oh, we got more people joining. George, what's going on, man? You're living at the gym, huh? My man. I respect it. I was you one day. And the gyms are open? Where are you at, man? Send me the invite. Alright, cool. So let me clear the Disney chart here because I have all these drawings on there. So while we wait, I'm actually going to show you guys my scanner. This is the scanner that I use to make our watch list on a weekly basis. So I find most of our stocks on this specific scanner. You guys all got a course when you first joined. That course involved this specific scanner. I told you all how to create this setup. It's very simple. It's finviz.com. I just go to top gainers, and those are the top gainers for the day. Like for example, today the top gainer was surf. I just kind of hover over the stock ticker symbol, and right off the bat I can kind of see if I like it or not. Like for example with surf, I don't like the fact that it has two long wicks, one at the top and one at the bottom. That tells me that the stock opened strong and tried to make a strong push to the upward side, but it got pushed back down to close halfway at open. And I never go for the 45 percenters or the double digit gainers. I typically want to go a little bit lower, because if something already went off 45%, you got to ask yourself, how much more does it really have to move? It's probably just kind of some news push. Another thing I keep in mind is the volume. I want volume to be, anywhere over 1 million is usually pretty decent for me. Another setting that I keep is the price over the 20-day simple moving average, because that tells me that the stock is going into a bullish territory. Price, I know a lot of you guys like to trade stocks under $20, but depending on if we're doing swing trades, day trades, or even options, I'll be looking at different price points to scan for. And then like I said, the volume, you can adjust it to over 500,000. And I trust American stocks, so I stick to US stocks. I know a lot of the members in here are from different countries, which I really welcome you guys, and I appreciate you guys joining. So let's see. I think everybody's in.
Yeah, we have 14 viewers now. Let me actually type in the chat one last time.
Disney got you guys worried in the after hours, huh? I saw some of you tripped out a little bit when it dropped to 118. One thing to keep in mind about after hour movements, guys, is after hour movements are pretty volatile. It's really only because there's such slow volume in the after hours that any small move can kind of shift the stock up and down dramatically. But it's not really a true move unless it makes like a 5% or 6% jump. Then there's usually a reason behind it. But in this case, it's really not.
Perfect. Yeah, just by posting that, we got 3 more people.
Cool. All right. Nate's here. Harry's here.
Yeah, I think it would be
just
a good
not
time
letting
to
you
start.
comment. Well, Nate, why don't you, if you have questions or anything like that, why don't you do me a favor and just post them in the Telegram app, and then we'll just read it off from there. That way you can participate just as much. But I'm gonna actually go ahead and start charting Disney. We'll start with Disney and then we'll go from there. So I know everybody jumped on Disney right before market closed today. I had initially added Disney to our watch list on Sunday, our Sunday watch list, and it was right over at this point right over here. So the reason why I added Disney is when you look at the 1-day candles, and honestly I don't remember the exact charting that I did, so what I'm gonna do is I'm gonna reanalyze it with you guys. That way you can exactly see my method and everything to it. But when I added Disney to the watch list, it was barely right over here. So we'll cover these candles. So imagine this was the candle that I was looking at, that I'm pointing to with my cursor, and that candle happened to follow a candle that had gapped the stock over the 10 and the 20-day moving average. The 10 and the 20-day moving average are the blue and the orange lines right over here. So anytime a stock gaps over those moving averages, combined with strong volume, it kind of foreshadows the future of the stock to be in a bullish territory. Especially the fact that Disney has been moving in a tight range for quite some time. Stocks like Disney don't go cheap for that long, especially if they're trading in a tight range. You know a big move is coming if the stock keeps moving up and down between two price points. Eventually, it's going to want to push back up because it keeps testing the price point that's above and the price point that's below. So you got to remember what happens when a stock gets rejected at a specific price point. Think of the market as one big psychological game, and people and traders are not willing to pay for a stock above a specific price until eventually they will pay for it because some kind of catalyst comes out that moved it above that price point. In this case, on Friday of last week, Disney managed to make two green candles back to back, with the second green candle having more volume than the previous one. These candles represent 1 day of movement. So as you can see on the top left of the chart, it says 1 day at the top left. That means that every single candle that you see on this chart represents 1 full day of movement. So Disney on Friday of last week opened at 104.98 and it closed at 109.05. There's very little wick at the bottom. That means the stock was barely pushed to the bottom and it got moved all the way up for a strong close over the 10 and the 20-day moving average. Closed way above but just below the resistance point that it had set 4 days before at the top of the red candle that I'm pointing to with my cursor at 104.56. So now you can draw a resistance point right around that point. Unfortunately, our entry point was $104, but Disney gapped up on Monday. So it didn't give us a clear resistance point. But anytime a stock gaps up over resistance, you want to look for a pullback. So what do we do now? How do we analyze the stock? Considering we want to enter the trade, obviously 1 day candles are not going to be our best thing to look at. So we want to look at a more micro level because 1 day candles will give you the macro picture, but for you to day trade or for you to swing trade, you want to look at the micro levels. Think of it this way. The best way to look at candles is look at the candle that you want to trade on the timeline. So if your timeline for a trade is a 10-minute trade, then look at the 10-minute candles. If you want to be in a trade for a minute, then look at the 1-minute candles. If you want to be in a trade for 4 days, then look at the 1 day candles. Obviously, a combination of all is required for you to successfully trade, but that's the best way I could put it. So what I'm going to do now is I'm going to change my 1 day setting down to 5-minute candles, and I'm going to see just the exact move on Disney. And I'm going to take out the extended hours movement, and I'm going to go back to the 15th, and I'm going to go ahead and take a look at what happens. So Disney gapped up over this resistance point right over here. So we're going to draw a resistance line at the top of the resistance, which was $109, roughly $109.40. When a stock gaps up over resistance, you never want to chase it on the way up. So this is what happened right when the market opened, and I know somebody fell for this. The stock gapped up and everybody started jumping in. As the stock gapped up, they hoped it was going up. Euphoria was kicking in and you thought that the world was endless, but a pullback is always imminent. As you could see, when I look at the bottom of the screen, the RSI is already in overbought territory. And this is where Robinhood traders always fail. It's because Robinhood does not give you this RSI on your mobile phone. So when you're going into a stock and you see it going up, you don't see that the RSI level is already overbought and the stock is about to come back down. So what we do, and this is why I always tell you guys not to rush your trades and to wait for a trade setup, we wait for the stock to have its pullback, and now it's going to give us a trading range. How do we draw this trading range out? The resistance in your trading range is going to be the top of where the stock reached on that high. So you move your resistance up to that point right over here. I don't include the wicks because that's not where the candle closed. The candle closed below the wicks right around the $119.40 mark. And where is your support? Now you want to draw down your support to the bottom of where the bounce happened on that stock. So now you have a support at $115 and a resistance at $119. The very next day, Disney gapped down and it created a double bottom at $113.45. So this would have been your ideal entry because a double bottom is a bullish sign. So our target entry for Disney would have been 104, but it gapped up and it didn't give us that entrance. So now our target is going to be our second price target. So remember, if you look back on our Sunday watch list, our price target for Disney initially was 112. 112 was our price target because of a previous resistance that Disney had set up previously while trading, probably last month. I don't remember the exact date. So what we want to see is a pullback to that price target. Price targets are created out of resistance lines. So think of it this way. Anytime I give you guys a price target, it's usually because that's the next resistance of the stock. When a stock breaks out of a resistance, that resistance automatically becomes a support. And anytime that a stock breaks out of a resistance, it's going to pull back to near the support, not to the exact support because nothing is definite in the market, but it will pull back to near the support. As you could see, the stock pulled back to 113 and change and made a double bottom before bouncing back up. You see how it struggled to get over that resistance and it got pulled back down. It consolidated some more and then it gapped up again. On that gap, that would have been a perfect entry because now you have a trading range one more time. The stock is trading above your support of 115 and it's squeezing a pattern. You can see that the stock is trading in a tight range, and then finally, boom, volume comes in, second green candle comes in. The pullback on the third red candle right over here does not make it below this green candle. You see how it stays above it? It tried to come to the bottom of the candle, but it pulled back here too. And then you have a bullish engulfing candle that pushed it back up over resistance. And check it out again. The stock breaks resistance, gets pulled back to the support, but manages to push above one more time. So that's the importance of pullbacks. Everybody wonders, well, what does a pullback look like? What does a healthy pullback looks like versus what does a normal reversal look like? A healthy pullback will always manage to stay over the resistance because once the stock is over that resistance should act as a support line. Do you guys have any questions on Disney before I move on to the next stock, or do you have questions about the future of Disney maybe?
Yeah, I had some news about Disney, which might have caused this news. Might have caused this little spark in volume and spark in buying. So the first bit of news was that Disney was supposed to give Florida their reopening plans for Disney World, which closer towards the end of the market, another news report from CNBC came out and said that that was false and Disney did not actually make those attempts to reopen. And then also they're in talks with NBA about resuming the NBA season at Disney World as well. So those two bits of news could have caused this move. And hopefully they stand true.
All right, here we go. So the next price target for Disney is going to be right at 122.44, and that's because that was a previous resistance that the stock had. So if we zoom into the left side of the chart, obviously this is where the market fell apart last month in March, where we hit the bottom on March 18th. But the stock had made a support line on on February 26th. The stock here tried to push back up, but it got rejected, so that automatically becomes a resistance. So our next price target should be right around the 122.40 mark before we push to the next price target of 134. Can you quickly go over where do you get the first resistance after the double bottom? So the double bottom on Disney was right over here. Let's go ahead and zoom in back to the 5-minute candles. The next resistance on Disney was created right when the stock broke below the support. So remember how we drew a support line right under this mark because the stock bounced off this support right over here? So this support, when the stock gapped below it, you could see on the very first candle of the day, the stock gapped below it and tried to push back up, but it got rejected again on that support. This support stemmed from this bounce right over here. So after this bounce, we created the support at $115.80. The very first candle of the day, Disney tried to push above that support, but it got rejected and closed way below it. Therefore, that now becomes our support. Now you could see that when the stock came here and pushed above it, it got an influx of volume and another influx of volume, but got this reversal candle right over here. So this candle followed by this bearish engulfing pushed it below back its support. So as soon as the stock falls below the support line, it automatically became the resistance, and this double bottom took it above it, but unfortunately it wasn't able to keep up the volume and it got pulled back below it. As soon as the stock fell below the 10-day moving average and the support line, you automatically turn bearish on the stock because you don't want a stock to trade below its moving average. That automatically starts to act as a resistance. So the ideal way to trade this stock would have been actually to exit right around this point and get back in as soon as the stock gaps up above the resistance line one more time, if that makes sense to you.
And then feel free to ask as many questions as you guys want. We'll get to them at a certain point in the video. Once we're done charting, we're gonna just go over random trading questions, whether they're basics or just stuff that you guys want to know more about. And yeah, we'll just keep scrolling through the chat if they just overlap each other.
Yeah, another thing that I've actually that I want to point out is you guys always ask me or comment about the fact that why did I get stopped out of my stock, and why was my stop loss so high. I always tell you guys that I give you the safest possible stop loss. The reason why I do this is because I know a lot of you trade options, and I know that if a stock falls way below the safest stop loss, you're going to be losing a lot of money. Therefore, I always give you the safest possible stop loss. But keep in mind that actually you could have stayed in Disney through this entire movement, because technically the realest support you had was down here below the gap up. So this at 109 was actually the safest support you had. And Disney will probably come back down to see that support at one point, because stocks have a tendency to come back down to meet their supports before pushing back up. So this would have been your final and last support that I would have put for you guys. But like I said, considering a lot of you trade options, I will always give you the best possible support. So right off the bat, when I look at this stock, I'm seeing a support at 110. I'm seeing a support at 114, and then again a support at 116. So there you go. There are three different supports right over there. The safest, obviously, if you entered the stock above this point, was 116. The second safest would have been 114, and the final and last support would have been 110. Can you use the double bottom as a support after it breaks resistance? Yes, you can. So that's the idea of creating this support right over here. This is actually one of the strongest supports that Disney has, is because every time that a stock bounces off of a support, that's another reinforcing factor that this support is even stronger this time. So think of it this way. Same thing with resistance. The more that a stock bounces off of a resistance, the stronger that resistance is, and the more glorious the breakout will be. That's why you see Facebook, for example, making such a great all-time high. Another example would be Nvidia. Nvidia made a crazy glorious breakout, and that's because the all-time high resistance is so strong. So when a stock breaks above it, usually it will be even stronger. Same thing with supports. If a stock bounces off of support 4 or 5 times and then it finally breaks below it, you typically see a lot stronger of a fall than you would on a support that it only bounced off of once. Would you give different stop losses for those who just buy shares? Yeah, absolutely. So I myself don't trade options all the time. I've told you guys before that that you have to base your option trading based off of market conditions. Obviously, market conditions right now, they're moving up and down on a daily, on an hourly and even minute basis. With that being said, if you are at an option and you know anything about options, you know that that kills your premiums. Your premiums on options rely on volatility, and when a stock is moving sideways and it's just kind of fluctuating up and down between very tight ranges, your premiums are going to get killed. So whenever you're trading options, keep that in mind. You have to keep in mind that market conditions will depict your success on those trades. I will definitely give different stop losses for those who just buy shares. If you ask me, I will give you I'll give you the next 4 stop losses for a stock. I'll be more than happy to provide you with that, because the last thing you want is to get stopped out of a stock when it's barely starting its move to the upward direction. Like Disney, if you had joined Disney when it pushed above the 116 support and you got stopped out because it fell below it, that's too bad, because the stock had so much more potential to move up. What is a double bottom? So a double bottom pattern, let me go ahead and Google it for you, and then I'm going to go ahead and share it on this screen. That way you can kind of see what it looks like.
It kind of forms like a W with the 2 bottoms touching a certain support level. And usually double bottoms, triple bottoms are even stronger than this. I feel like the more times a stock touches a certain support level, the stronger that support is.
So as you can see right over here, a double bottom would look something like this. This is on an actual chart. Double bottoms are not always perfect. They're not going to be exactly at the same price point, and it's going to look kind of like a W. So the top of it is going to be your resistance, and the bottom of it's going to be your double bottom. When the stock hits the top of the resistance, it usually comes back down and then to test that resistance again before a breakout. Same exact thing that happened with Disney right over here. You could see that the stock right over here hits that double bottom. 1, goes back up, comes back down. 2, and then this is the neckline right over here. The stock's neckline is right at that point that I moved it down to. And then as soon as the stock gaps up above that top of the W, that's when a stock sees an influx in volume, as you can see right here on the bottom. So the stock market is all about patterns. So people look at patterns, people will look at different things. People will look at different volume. My personal favorite thing to trade is price action, but you have to keep patterns in mind, especially triple tops and double tops. Let me see if I can find an example of a double top for you on SPY. I believe there was one. Right over here. Let me see. Actually, here's an example of what a negative divergence looks like, because I always mention it to you guys. Do you guys see on SPY how the stock here was moving up? So this is the stock market moving up, and it's making higher highs, but the RSI down here keeps on making lower lows. So that is a clear example so the RSI represents the strength in movement. So think of strength in the movement on the upward in the upward direction is getting weaker on the RSI. It's making lower lows, although the stock is making higher highs. Therefore, you should be expecting a pullback, and the pullback is imminent. So that's just a brief example. Let's see what else you guys have. I lose too much with options, so I just buy shares now. Yeah, to be honest with you, imagine you just didn't trade options and just kind of understood how trading works. You got to remember, options you can make a lot of money with options, but anything that's high risk, anything that's high reward is going to be high risk. If you don't, the best way to trade options is, to be honest with you, day trading is my favorite when it comes to options. Holding options overnight, especially in today's market, it's going to be tough. You know, I'm in and out of options sometimes within minutes, sometimes within seconds. Same thing with the scalp master over here. He goes into SPY, 5 minutes later he'll sell his option. So
I feel like it's easier to pretty much manage your risk when you're in on like a certain option for only like a couple minutes. So you have it set in your mind that I'm only going to be in this option for a couple minutes. If it goes my way after you do your due diligence, of course. If it goes your way, then cool. Just always have a price target or a profit target, and also have a stop loss. Usually, when I'm scalping or when I day trade, my first stop loss is going to be right at the support if it breaks that support. But that's also usually where I try to enter because it gives me the highest probability of making money on that certain trade. So I just keep on repeating that.
Cool. So next chart, what do we have?
Next one's gonna be Microsoft.
Microsoft. Bill Gates. All right. So Microsoft actually paid out their dividend today. Interesting. So today Microsoft paid out a 51-cent dividend. Therefore, they dropped 51 cents right at open. So you probably have heard me say this a few times. When a stock pays out their dividend, they drop by the dividend amount on the day. Do you ever hold calls on stocks you are bullish on long term? Yes, I do. If theta makes sense, if that makes sense to you. So theta is time decay, and with time decay, you gotta remember, time is always working against you when you have options. And if you're holding an option for a year, like for example, if you're in a bullish market, you'd ask yourself, like, why don't I just buy a stock for an option and then hold it for the entire year and see if the stock will go my way. Four things can happen that year, and that's called like earnings, which will really mess up your implied volatility on that option, which will depict price. So options have multiple things that break down their price. So they have intrinsic value and extrinsic value. Their intrinsic value is reliant on the price of the stock itself. And then they have the extrinsic value, which is going to be your implied volatility, and time. And time is going to be your enemy when it comes to options. So yes, I will hold an option at times for a week, 2 weeks, 3 weeks. But you got to remember that every day that you hold that option, you're going to be losing money on time, and you're going to be exposed to the stock market movement. If you just take a look at the last month of the stock market, you'll see how much it's moved up and down and how much it can hurt you to hold options. But yes, I have held options for more than a month before, and it has been really profitable. But at times, it makes you wonder, how much percentage do you want return on an option before you call it quits? Because the longer you hold it and the more profit you're going to be seeing, the more likely you're going to hold greed on that option. And we are day traders. Your strategy when it comes to options all depends on your overall strategy. So if it's my investment portfolio and I know there are earnings for a stock tomorrow, and I frankly don't know if the stock is going to go my way or if earnings are going to go my way, then I'll think about buying puts on that specific option, on that specific stock. That way I can hedge my position. And in case the stock drops, I can have the puts to offset any drop that may happen in my investment.
Yeah, one thing to keep in mind when trading options, especially when you're buying options that are later on in the week, if you're buying weekly options, is the more time that passes, the more you're just going to get burned. And if you're thinking of swinging a certain position, I would at least buy an extra week just in case it doesn't go your way immediately, and just so you don't lose out too much on theta. Unless you're going to be in a stock and you're just going to day trade the option like we were talking about earlier within like the first 10-15 minutes of you holding it, I usually would just add another week. I would just do 2 weeks.
All right, cool. So let's go ahead and chart Microsoft. So when I look at Microsoft, I'm seeing a cup and handle pattern forming right over here. So it's actually a kind of an awkward cup and handle pattern, but it's there. For those of you who are new on the market, I'm not making it up. This is what it's called. And that's because it literally forms a cup. You see that perfect U, and then it will form a handle, which is forming right over here. And what we're expecting the stock to do is to eventually break this resistance right over here. So this is the cup, this is the handle, and the stock is on the verge of a breakout. As long as markets stay healthy, Microsoft is one of those companies that has, I believe, over $100 billion in cash flow. My favorite stocks to invest in are ones that have a lot of cash flow. Personally, I'm invested in Microsoft, but I do trade it a lot on a short-term basis as well. So this cup and handle is forming. The top of that cup is going to be your resistance. So I'm going to be drawing a resistance right over here. Notice how this resistance has been met before. That was on February 19th where the stock had reached that resistance before. So when the stock breaks out of this cup and handle, I expect it to move its way above $188. And the next price target, the very next price target, is going to be the very next resistance. So that's going to be $191 or $192, which was the top of this candle right over here. So when a stock breaks out, what I expect it to do is I expect it to reach that $192 resistance. It's probably a smart idea to take some profits around this point, because then a healthy breakout will pull back and consolidate between this, which is now its support. So 188 is currently its resistance, but as soon as the stock goes above it, it should turn into its support. And a healthy breakout will pull back to near the support, and then it will push back up to test the new resistance of $192 to make an all-time high. The all-time high for Microsoft will probably take it over $200, assuming that markets stay healthy. And that goes goes without saying one more time. Anytime you're trading one of these large cap stocks, you want to keep an eye on SPY, because SPY and these stocks will move together. You got to remember, SPY is made up of these stocks, and if all these stocks start dropping, SPY will follow. So it's good to have SPY side by side with Microsoft, with Apple, with AMD, with all these stocks. Now, there are times when one of them will be the outlier and it will move in its own direction and have a mind of its own. Tesla would be a great example when it comes to the Dow. But generally speaking, SPY and the Dow will depict the movement of a lot of these stocks. One thing to also, throw out there, and that's just for common knowledge, you want to look for laggers. So if all these stocks are moving in a specific direction, but one of them seems to be lagging and there's no specific reason why it's lagging behind them, there's no news, there's no negative news about it, there's no earnings that are about to happen, then you may want to keep an eye on it, because it will eventually catch up to the rest of the stocks and move to the direction that they're moving. So that's Microsoft for you. Do you have any questions about Microsoft? I don't think there are any questions on Microsoft.
Cool. So the last stock that we had on our list, at least to chart today, was Mark.
I know Harry wants MGM with a laughing face.
Yeah, we'll get to MGM for sure.
Mark?
Yeah, Mark.
How's that guy?
He's good.
Yeah.
Said what's up.
All right, cool. So Mark, oh, you know what? That's funny, because Mark is the popular one this week. So Mark is, right off the bat, what I'm seeing here is I'm seeing a strong rejection at that 188. So although the stock keeps pushing above it to 194, 195, it keeps coming back down to close above. What a bunch of Apple fanboy.
It works.
I love Apple myself, man, but you got to give credit to Bill Gates. So this right here, the 184 mark that Mark keeps closing at or getting rejected at, is going to be the strongest resistance that you have. But you got to think about it from a psychological standpoint. So candlesticks tell you a story. So the top of these candles are going to be the highest point that the stock went to before getting rejected. That means that traders like you and me sitting behind their computers keep seeing the stock go to the 194, 195 mark, but they're not willing to pay any more for it. So they keep selling it back to the market as soon as that happens. And they keep closing it below 189. So what happens now? If you're looking at a breakout for Mark, would you enter the stock as soon as it breaks over 190? And the answer is no. Why is that? Because the stock never successfully closed over that point. A successful breakout will lead you to close over a specific point. To me personally, I wouldn't even touch Mark. Well, I mean, if we're already in Mark. We've been in Mark for quite a while. But if you're looking to re-enter Mark, then I wouldn't touch it until it breaks out of the $2 point, because at that point there's a whole new level that it got introduced to that it has never seen before, and The only time that it had seen it before was on the initial breakout right over here. So notice that the top of these candles right over here is right around $199. I'm sorry, $1.99. So what I would like to see from Mark is a push over this point, and the move is coming. The reason why I say so is because these candles keep getting smaller and smaller. That means that there is less and less people pulling it back down. There's more and more people that are just having the tightest trading range, and the tighter trading range you have, the more likely that a stock is about to make its move. So what I'd like to see Mark do is I would like to see it push over the $2 mark, pull back, and this is what I tell you. A lot of you say, well, it's already broken out, how can I get into the stock now? And this is another lesson on chasing a stock. If a stock breaks out and it keeps going, stop chasing it. Do not get into the stock until you see the pullback. Now you expect a pullback from Mark to near that $2 price point, and that will give you the entry, and you can set your stop loss just below the breakout point. Not at the breakout point, but just below it. And then you would want to ride the stock back up. Say the stock makes it to $2.47. Say that Mark on its breakout makes it to $2.47, but gets rejected at this point. So if the stock gets rejected at this very point, that automatically becomes your resistance, and the stock will pull back, give you an entry, and you can ride it back up to a price target of 247. You would take profits right around this point, or take some profits, and expect the stock to consolidate or fall back down. If the stock successfully breaks out again, wait for the pullback, add more to your position, and ride it back up, and so on and so forth. The healthiest stocks, and this won't always happen, reason being is because nothing is definitive in the market. There's absolutely nothing definitive about people's psychologies, and the market is all psychology. So when traders like you and I are taking the stock up and down, it's not going to meet our price points perfectly. It's not going to meet our support lines perfectly. You're just going to have to watch volume. You're going to have to watch trading patterns and go based off that. So with that being said, you on any breakout trade that you do, you're going to want to go let the stock ride up, enter on pullback, ride the stock right up, enter on pullback, and so on and so forth.
Okay. And usually the dollar for penny stocks, which are stocks that are $5 and cheaper, the $1 mark for each dollar goes up is usually a stronger resistance level and a stronger support as well. So keep in mind that it might not, you might see a fake breakout when it comes to it going over the $2. So wait until you see a couple more candles, and then like you was saying, for it to bounce off of that $2 point for an entry, or at least somewhere near that $2 point, because lately I've been noticing there's been a lot of fake breakouts, and you wouldn't want to get caught in one of those.
Can we say that Mark's first support is 182? You're absolutely right, Rob, because I'm looking at it at two-hour candles. If I zoom into the maybe 5-minute candles, it'll give us a better idea. So Mark has been, for the last, I would say, maybe 40 or 50 minutes of the day, it maintained a level over 186, and then it maintained a level over, the primary support that I'm seeing here is 180. That would be the best support that I can give this stock. The 184 support is kind of weak. The 186 support is kind of weak. But I would say that 180 is going to be your best support, because that's the stock, that's the price that it gapped over on the 20th, but maintained its level above all day. So yes, I would say that 180 is the best support. There's a good lesson to be learned here though, and this is exactly what I meant by placing your stop loss just below the support. I want you to pay attention to this specific candle right over here, and I want you to see how it dipped below the support, but it bounced right back up to close above it on the 5-minute candles. This is why I tell you that your stop loss should be below its support, not exactly at its support, because here you would have gone stopped out too early. But if you placed your stop loss at 177 or 178, then you probably would still be holding this position, and it would still be riding in your direction.
A good example I have of losing money when it comes to supports and resistance levels, when you scalp, or when you trade in general, if your stop loss is right at that support level, I would say 80 to 90% of the time you will get stopped out. This is like a statistic that I was reading the other day. Usually stocks hit their first resistance point and their first support point within the day or within 2 days. So if you're holding that position for that amount of time, it's likely to pull back or meet that resistance point. Uh, so always keep the stop loss lower, and then once it reverses, you won't be down on yourself for missing out on potential profits.
General question: when charting, how do you decide to use different candle time frames? So I believe that we went over that in the beginning of the video, but let me go over it one more time. Set your time frame accordingly to the time frame that you're giving yourself to trade. So if you want to be in and out of a trade within 5 minutes, then look at 5-minute candles. If you want to be in and out of the trade in 10 minutes, then look at the 10-minute candles. But don't focus solely based on those candles. You want to shift your focus to all the different time frames to see the macro and the micro picture, because sometimes you'll be looking at 1-minute candles and the RSI looks healthy, but then you switch to the 1-hour candles and all of a sudden the stock is over 80 points on the RSI and it's way overbought. So it's generally good to keep an eye on. My favorite is going to be 1 minute, 30 minute, 1 hour, and 1 day candles. Anytime that I'm doing a swing trade, anytime that I set up a swing trade for you guys, I will always pay attention to the 1 day candles. Those are going to be my ultimate giveaway to if a swing trade is going to go our way or not, because I can take a look at the full day volume on a candle. I can take a look at the very next resistance on the entire day candles. And I can also take a look at price action on the 1 day candle. If the wick on top is too long, or if the wick on the bottom is too long. And then I zoom in to focus on the 30-minute and the 15-minute candles. I generally don't look at 1 and 5-minute candles when it comes to swing trading, because I focus on the macro picture, because I'm holding the stock for usually more than 2 to 3 days. Let's see, MGM. So let's take a look at MGM. We're going to do 2 more charts.
MGM, and then...
Oh, look at that. I already have it laid out for you guys. Let's go ahead and take a look at... Let's see, I think I did this on 1 hour candles. Cool, so let's take a look at MGM. So let me clear this for you guys. Actually, no, let's keep it because it makes sense. So let's break it down from the top to the bottom. So I have the 1760 resistance right at the top of the stock for very obvious reasons. So if you take a look at this point right over here, this is where the stock got rejected, and it happens to be the same point, not coincidental at all, that the stock bounced on March 10th and 11th before gapping down. You see that? And also not coincidentally, this is where the RSI became overbought. So remember how I tell you guys that price targets are just as important as knowing your exits on a freeway? And this is a perfect example of what I mean by that. So I had a price target for this specific stock to reach 1760 when we had initially entered it probably last month. Reason being is because I knew that would be the perfect price target before it hits its very strong resistance of 1760. Why? Because if this stock had made it over the 1760 mark, then it would go back to bullish territory, and the entire market is not ready for bullish territory yet in terms of the hotel sector. So think of it this way: the stock dropped below and it made a high, and then it made another low. Therefore, if the stock had came up over the 1760 mark and met 22 and came back down, that means the reversal would have started being bullish, and we don't want to see that on this specific sector yet, or the market doesn't want to see that yet. Therefore, the price point of 1760 became our price target, and it became our resistance as soon as the stock got rejected off of it. But we already knew that was a resistance point, because the stock had bounced off that point before and it gapped below it. And if you take a look at this candle, it even tried to test it again before getting pushed back down and rejected. And this is where we get our next support. So when I look at this support right over here, or resistance, this is where the stock tried to gap above it, but then again got rejected and it gapped below its next support. Take a look at how much selling happens when a stock gaps below a strong support such as this. You see how these red candles formed, and this is the exact definition of don't catch a falling knife. Because if you had been in this stock below this support of $14, you would have been going straight to the ground. Because that was its last and final support before the stock broke down and saw no ground above it, below it. Imagine like the elevator snapped and is just free falling from the sky. Do you think this is a good long-term hold? MGM. So MGM, yes, it is part of my long-term holds. I don't think MGM is going anywhere, and I actually think that all the resorts and anything that has to do with Las Vegas actually is going to see a huge bounce as soon as Vegas opens up its doors, which is going to happen right around the corner. Personally, I like MGM. Their numbers look good. They have a dividend, as you can see. It's only 15 cents. But one thing to keep in mind about dividends, especially this time, is I know a lot of companies are starting to slash their dividends. So when you look at the news and you see a company slashed its dividends, that's a really red flag for investors, because a lot of investors hold stocks specifically for the dividend. So keep that in mind when you're holding a stock. Let's see, what else do we have? UCO, Rich. You think Rich lifts? Yeah, I think he lifts. UCO, look at that. Wow, that is tight. That is really tight. First thing I'm seeing on this one is a pickup in volume. So notice how weak volume has been on this one, and all of a sudden volume started spiking ever since the 20th. Or is that, yeah, the 20th of April. So anytime you look at a stock, volume is going to be your best friend. Price action and volume. So anytime you see volume pick back up, start expecting a move from the stock sometime soon. I actually expect a move from this stock pretty close. This is post reverse split. This is not USO, this is UCO. I actually have this on my watch list. So volume spikes in this stock. A job offering, and we'll be opening up soon. Oh look, Chris got the insight. Don't talk too loud, Chris.
We didn't hear you. Or at least we're gonna act like we didn't.
All right, so I'm looking at 1 hour candles. So this is my thought process right when I take a look at the stock. I want to see what it's doing on the 1 day candles. I want to see where it's at in terms of moving averages. So let me go ahead and go to 1 day candles and take a look at what's happening. Yep, you see that? The stock is now trading above its trading range. And we're seeing a crossover between the 10 and the 20-day moving averages on the 1 day candles. So crossovers are so important, and they're even more significant. The more macro the picture that you're looking at, the more important that these signs become. So I'm seeing that the stock is way oversold. It's still in the way oversold territory, and we're seeing a crossover when it comes to the moving averages, and the stock is trading over the 10 and the 20-day moving averages. A quick lesson on moving averages. Some people will prefer 9 and 18-day. I prefer 10 and 20 because it's personally worked for me. Another popular moving average that is always looked at is 50-day moving average, 100-day moving average, and 200-day moving average. Those are lessons that I'm not going to get into right now. They're a lot more thorough, and I don't want to lead you guys wrong, but we're going to focus on the 10 and 20 day because those are personally what I'm looking at right now, considering the market position. So now that I've gotten an idea of where the stock is, I know that this stock is somewhat starting to become bullish, especially that it's now over the 10 and the 20 day moving average. So now I understand the macro picture. Let me take a look at the micro picture. Let me take a look at the 1 hour candles. So the stock, okay, so a good lesson on stop losses and where you place them. So the stock gapped up over this resistance, gapped up over this resistance, and then it gapped up over this resistance. So where do you set a stop loss if you join the stock right over here? Your first stop loss, if you join the stock down here, is going to be right over this point. You see how this is this wanted to be a double bottom so bad. It really wanted to be. Like right over here, you could see that the stock tried to form this double bottom and push back up, but it got rejected. So a double bottom can turn into a triple top really fast. And this happened right over here. The stock made a double bottom, but it got rejected. It didn't have enough strong volume to push it over. got pulled back down below its 10 and 20 day moving averages and consolidated sideways until finally it gained enough traction. You see how much traction it gained? Boom, green volume, green volume, green volume, and it moved over the 10 and the 20 day moving average. The crossover happened and it carried the stock over the resistance of $17.60 roughly. So you could have entered the stock, and now that it's moved over that resistance, this resistance will automatically become your stop loss level. The next day, the stock gapped up, and it, reached all the way to $21. And now you can update your stop loss to the very next support line, which is going to be right around the $19 mark. Again, the stock gaps up the next day, and now your new support is going to be at the top of the very next day, which is going to be right around $22. With that being said, do you see how the stock pulled back to this support line through the day, but it stayed above it? Your perfect support would have been right at $22, and your perfect stop loss would have been right around $21.95. Now that is the safest stop loss you can put. You could have also put a stop loss at $20.50, which was the low point of the previous day. But you generally want the stock to stay over the highs or the closing price of the previous day. With that being said, the stock can still go. It looks like it still has not seen too much of resistance, but I am expecting a pullback from the stock, because when we're looking at the 1 hour candles, you can see that the stock is becoming overbought. And although the stock made a higher high, the RSI made a lower low. So now you have a negative divergence that can easily pull the stock back. And if you want to enter the stock, a perfect entry is coming up for you, because when the stock pulls back, you generally want it to stay above that support. So when it pulls back to 22, you can enter the stock and put a stop loss right below that point and ride it back up. Your next resistance is going to be the top of these candles at $23. Let me see if there was any signs that would have told you that this stock was about to have a reversal. Right off the bat, I'm seeing it right over here, and it's this positive divergence. I'm going to go ahead and take out volume. I'm going to hide volume for a second. And I'm going to show you the stock became oversold, way oversold. It reached the negative 12 point, and it made a lower low. You see that? It made a lower low, and then the stock made a higher high. This is the same exact thing we saw at USO when we called the very bottom before the stock, when the stock bounced and pulled back down. This is exactly what we're seeing here. We see that the stock make a lower low, and then the RSI makes a higher high. Volume spikes for no reason, or no apparent reason. The real reason that this spiked is because oil obviously is being used up now that America is opening back up. We're seeing people start pumping again. We're seeing industries start shifting, energy start being used again, and now you see that volume spike, and then this tight trading range. Look how tight that trading range is. Stock moves between it, takes time to consolidate, and then boom, it has its massive breakout. The stock jumped from 18 to 22 in a matter of 2 days, 2 trading days, that is. So now what are we looking for? The ultimate thing we're looking for is for the stock to break above the $24.50. Why is that the big breakout for the stock? And that's because that's the top of the gap that it needs to fill. So the stock gapped from here, $32 all the way down to $24.36. That happened on April 20th to April 21st. That's where the stock gapped. So now what we're looking for is for the stock to break above this $24.50 point, and as soon as it does, same exact idea, same exact breakout will happen. The stock will go up, and then the stock will come back down, retest the support, and then it will pull back up, and so on and so forth. It will keep doing the same exact patterns until finally it becomes a little overbought, and so on and so forth. So this is what we call when we fill a gap when it comes to the stock market. Anytime that a stock gaps overnight, whether it's to the top or the bottom, you want to expect that the stock will eventually fill that gap. Apple, please, will JD be affected by the news? JD will definitely be affected by the news. No offense to anybody, but personally, I there's a long history of Chinese companies misinforming investors about their numbers. We saw that happen with Luckin Coffee. And the only company that I really trust coming out of China is going to be Baba, and that's because I personally have experience with that company. In terms of distributing, and I know that they're a legitimate company. I know that Shopify uses them. Shopify dropshippers use them a ton. With that being said, when Shopify reports good earnings, you can kind of foreshadow what Baba's earnings are going to look like, and vice versa. Another thing to keep in mind is when Shopify reports good earnings, you can kind of foresee what PayPal is going to report, because what do dropshippers use the most? It's PayPal. So keep that in mind when you're thinking about different companies. Think of their friends. Like Shopify and PayPal are friends, obviously, because as companies, that is, because obviously they rely on one another. Apple. Will Apple be affected by the news? I don't think that's your question. You just want to take a look at Apple. I think the next live should be on chart setups.
Yeah, we'll definitely do that, because it seems like I've been getting that question asked a lot. Just like what indicators, what moving averages, and then how to tell like how do you read them? Like what signifies like a short-term drop, a long-term drop, and then vice versa. So yeah, we could definitely do either another live stream or a video on that topic.
Do you mind explaining to me like what do you mean by chart setups actually?
Well, if I'm understanding this correctly, it's what indicators you have set up on your charts.
Oh, I understand. Okay.
Moving averages, and I think they want to learn more in depth about the different chart times.
Got it. Why am I looking at specific times and okay, that makes total sense. I could see why you're wondering this. I guess a good like lesson to be learned from chart setups in general is if you're trading on Robinhood and you only use Robinhood, please stop. I love Robinhood. Robinhood is a great trading platform. The reason why is because its interface is so easy to use, but if you don't see 1 minute candles while you're in a day trade, you're gonna end up losing every time, because you need to see real-time movement of a stock. That little line that you see on Robinhood that is so dramatic when it comes to movement. Sometimes SPY will drop half a point and everybody in the chat will lose their mind, and the reason why is because Robinhood over
Over dramatize their movements.
Exactly. Yeah, and it's really unnecessary. Like, a professional trader would look at, a platform like Thinkorswim or maybe Webull. I haven't used Webull.
Webull is CSO certified because their desktop app is insane, for beginners at least. You can see candlesticks, you can have all your indicators, you don't have a limit on indicators. Your candlesticks range for the same range as the candlesticks on TradingView. And then when you want to get into more advanced trading, I would recommend Thinkorswim. But if you're just doing day-to-day trading and like certain swings, then yeah, Webull is definitely the way to go. And their mobile app is amazing.
All right, cool. So let's see. The price stock drops by the amount of the dividend. How would that look like for PK? CSO certified. That's funny, man. We should make that a thing.
It should be.
Cool. So Park. Well, they already paid their dividend out of 45 cents on March 30th. So you really don't have to worry about it probably for another, I would say, month or so, but it would drop by 45 cents when it happens. So they usually won't tell you when dividends are going to be paid out, because imagine you knew the night before, you could just buy puts. That would be pretty awesome, right? So dividends are usually randomly paid out, but they will happen every quarter right around the earnings. So expect that to happen. So you see how the stock the very next day when the dividend got paid out, you see how this is March 27th to March 30th, the stock dropped automatically. It actually dropped exactly 81 to 80.91. Actually, no, 80.80, and then the next day it opened at 80.20. So that's right around the dividend price point. So that's exactly what you should be expecting next time. But typically a stock will recover right after dividend. The only reason why Park didn't is because of the turmoil that the world is going through right now, which I hope everybody is being safe from out there. Imagine trading hyper stocks in a few years. Yeah, let's put our name on top of a building. I'll have a whole floor for us.
Dream team.
Cheryl, okay, let's see. Welcome to the team, by the way, Cheryl. Love to have you. I know we've got a lot of new members this week. Really excited to have all of you. And by the way, if you're frustrated or anything like that, don't be. We're going through something that the world has never gone through before, which is coronavirus, and unfortunately, that has impact that is unseen. So investors and traders, even Warren Buffett was down $1.1 billion yesterday in his investments. Can you imagine that? That just goes to show that not you, not the CSO, well, maybe the CSO, I don't know, he has some insider tips. Not anybody in this world can tell you what the stock market's going to do the next hour or the next day, which is why we create these setups based on historical analysis. But when we're looking at history, unfortunately, the coronavirus history is unavailable because it's not something we've seen before. So all we could do is create setups and trade based on them. Patience is a virtue, and stop losses are your best friends. Let your runners run, and let your stop losses take care of the losses. Shout out to the hyper ladies. Definitely shout out to the hyper ladies. I love when we get a girl trader in the chat. It just goes to show that you guys are hustlers. All right, let's go ahead and take a look at Boeing, and that's going to be the last chart that we're going to take a look at.
Can I just say something before we get into this chart?
Go ahead.
Me and Boeing have the worst relationship in the world. Boeing always burns me, and I can never find the winning side of Boeing. So
well, we should
X'd off.
We should keep you off of the airplanes for the next year.
That's X'd off.
All right, so let's go ahead and take a look at Boeing. So this is the chart that I actually sent to you guys last night in the chat. Apart from what anybody else is saying, I am still bullish on the very near future of Boeing. I just see that this is squeezing a move that's bound to break out. Notice how all these stocks are making massive highs. Boeing is the only one that's not. I think that's because it's lagging behind everything. Boeing has had a lot of bad news come its way in the last year. I mean, horrible news for the value of the company. Unfortunately, from an ethical standpoint, maybe Boeing could have done better, but I personally don't know what happened on the back end. I don't know if anything they did was intentional. I don't know if they could have prevented anything from happening, but I am a technical analysis person, so I will leave all ethics, I will leave everything aside while I'm looking at my charts, because if you chart when it comes to your bias, then it's just not going to work your way. With that being said, I am seeing a move coming from Boeing, and that's because it has been channeling down, it has been creating this squeeze pattern, and it finally broke it. So a stock, when it comes to diagonal resistance, as soon as the stock breaks out of that diagonal resistance, typically what you want to see it do is get pulled back to it to bounce back off of it. Now, it may not happen to the T every time. What I'm looking for Boeing is to break above the 145 resistance. The first resistance it has to break over is going to be the 137 resistance, and then the next one is going to be 145. So what I'd like to see it do on this very next resistance that it breaks over is I'd like to see it break out of 145 and get pulled back down for an entry. The safest entry you can find is as soon as the stock breaks out of 145, wait for it to get pulled back to 145 or 146, and then watch it boom back up. So I have some pretty high price targets for Boeing. 145 would be the next, 160 would be after, and then 180 would be after. If the stock passes 180, then that's going to be the time that I expect the Dow or the market in full will actually be in positive territory again. I just don't see Boeing passing 180 before the SPY passing its February highs. So with that being said, Boeing is one of those that you have to be patient with, but you also have to be very firm on your stop losses. The last stop loss that I would have for Boeing is $120. I'm personally in this stock, and I will ride it unless it drops below $120, because the 180 price target that I have for it is very firm, and I expect the stock to move towards it within the next couple weeks. So with that being said, I hope this helps. Not investment advice at all. This is just personally what I have in my positions. You can follow it, you can leave it alone, whatever you do. If you're playing options, please be careful, because The price movement of Boeing is very unexpected. They can come out tomorrow with a message that says their 737s have their engines randomly fall out of the sky while you're flying. That's just how the year has been for Boeing, and the year has been for all of us. So with that being said, that's going to be Boeing. That's going to be my price target for it. And my reasoning is because it finally made that break over that diagonal strong resistance that it's had. So with that being said, we're actually going to get off now. I hope all this recorded. That way anybody who missed it gets to see it. I probably said more than any other word during this video, but you got to bear with me. I'm getting there. I did make my voice deeper the entire time, so...
Usually it squeaks a little bit,
Yeah.
just like mine.
Yeah.
We both kind of mask our voices just a little bit.
I'm actually using one of those filters right now. You know? Cool.
Do you
Well,
think we should answer like maybe a question or two?
yeah. So, charting aside, do you guys have any questions?
Anything like general trading questions that come up a lot, just so we can maximize this live stream.
Oh, and I hate to be that guy, but if you're not already subscribed, why don't you go ahead and subscribe?
Like, comment, subscribe, holla at your boys.
I would like to, grow this channel. Eventually, I would like to make videos on a, weekly or, weekly, not daily, but weekly basis, I would say. Let's see. Amazing content. Thanks, Rob. Thanks for being with us all along. Cool.
The Apple man himself.
Yeah, and I think Rob, did they offer you CEO yet?
Or at least CSO. I'm glad you enjoyed the video, Rob.
Cool. All right.
Well, as always, I mean, if you guys ever have any other questions, you can just type them into the chat. And if you're too shy to ask in the chat, just either contact me or contact Q. I know Q gets a lot of chart requests, and he takes his time with them just so they're accurate. But if it's something urgent, you can just message it to me. I'll always answer, and I'm usually by my phone, so I'm pretty responsive.
Julian, is the Hyper Fam going to be here a while? You know what? I'm not going anywhere anytime soon. Mentioned commercial real estate. I try not to sleep as much as I can because I like to work around the clock. With that being said, I don't think the Hyper Fam is going to go anywhere. I would like to diversify into commercial real estate and diversify into many other things, and I will stay around. So you guys are my family, so I don't think I'm going to be leaving you guys anytime soon.
Rob, so I've been trying to make a watch list by sectors, but you're having trouble. So one thing, at least this is what I do right now. I would usually like to stick to one sector if you're making a watch list, just because once you know one sector inside and out, you're ultimately going to be more confident when you're going into positions and just the overall outlook on that sector. But if you did want to do like different watch lists for different sectors, just look at market cap. The stocks that have the most market cap usually are good ones to look at.
Rob, you're probably already familiar with FinViz because you've actually taken my course. So I think I've mentioned FinViz in the course, but you can actually look sectors up right over here. Whatever sector you want to get into, you can just find it and you can go straight to it. You can mess around with all these different filters and eventually find the right sector. Sectors move together, so that's one thing to keep in mind. So try to group your watch list in sectors, and that's a great way to find laggers. I hope that helps. ETFs. You know what, Harry, you asked me for ETF charts on a daily basis, and I always wondered because I don't personally trade ETFs too much unless it's triple Q. No relation to the name. I just like the tech sector. But when it comes to sectors, keep in mind, when it comes to ETFs, it's always good to keep your eye on the ETF of the sector that you're trading a stock in. So if I'm trading Microsoft and I know that Triple Q owns a large portion of Microsoft, then I'm going to keep an eye on QQQ like I keep an eye on SPY. Because if I get a general idea of what general tech stocks are doing in their ETF, then I get a general idea of what the specific stock is about to do as well. Any tips for anyone still paper trading? Yes, treat the paper money like it was your own. So one thing, paper traders have a mentality of, well, this money's not mine. Let me go ahead and blow 50 racks on a trade, and
I can just
sometimes you'll
reset
get
it.
lucky and make money. But if you learn how to allocate, because I think Thinkorswim gives you 100K in paper trading. If you learn how to allocate your money and your position sizing accordingly from paper trading, and you set the right habits right in the beginning, then you will lead yourself to success when you start using your real money. Because the habits you create as a beginner day trader are habits that are going to stick, and habits are hard to break. So if you can't manage the paper trading account, you won't be able to manage your real account.
Yeah, just treat it as if it's real money, and never use the reset button on that balance, because you want to keep yourself accountable at the end of the day, so that when you actually deposit money, you're not going to be doing the same thing and just going all in on a play, kind of like Wall Street bets on Reddit.
All right, cool. So I'm gonna end it here. This coffee is making me anxious.
Thank you guys for joining. I hope you guys all learned something from here or took something away from this.
Cool, and I think we're gonna do this more often. Matt and I have actually been thinking about doing a podcast. So, just to talk about markets, talk about different stocks, talk about different occurrences. So hopefully, we'll get around to that soon. And we'll keep you guys updated. Thanks for joining.
Thanks, guys. Have a good rest of your day.
Bye bye.